Hello, my name is David Lincoln. You're watching the Short Vol Show live on YouTube. So I just came on to say hi. I know I've got some new viewers. Welcome if you're a new viewer. This show is about volatility, the VIX. It's also about trading in general. And I think there's some confusion out there about what a trader is. And some people have this very specific idea of like a trader is somebody who has some sort of formula with charts, and then they pick where they're going to buy something, and they have to, don't forget, you have to put in a stop loss order, and you have to put that X percent of below where you buy something, and then you have to put an offer X percent above, and you can only use 2% of your account, and all this stuff. But there's a number of different ways of being a trader and a number of different definitions for it. And there's all kinds of different things you can trade. And so for our purposes, the definition would probably be just somebody who takes a certain amount of capital and attempts to turn it into more capital through buying and selling of something, by trying to establish the value of something and buying something that they feel is undervalued with the idea that somebody will come along and pay more for it at some future point, or conversely selling something that they feel is overvalued and then with the anticipation of buying it back at a cheaper price. And my particular area of sort of focus is I trade options, exchange traded options, and I'm a position trader. What that means is that I will tend to do a bunch of trades, put a bunch of trades together and leave them for a certain period of time, and then adjust that mix of trades over time in the hopes of making more money. And this channel has pretty much been about the VIX being the SIBO Volatility Index. And I attempt to explain to people about what the VIX is and to educate them on how everything sort of works in that area. So here you are. That's where you are. You're here. Anyways, it's the weekend. We've had a period of time where the VIX has pretty much gone down, and all of the ETFs that we trade that are related to the VIX have gone down for a long period of time. And this is really a golden period to be shorting this stuff. And if you're not shorting it now and making money, then you're missing out on an opportunity. And I know that there's worry. Anything that you're trading has risk, and nothing is a sure thing. And there certainly are things to worry about at all times. But if you don't jump in there and pull the trigger in some way, then you're not going to make money. It's just the way it is. I remember having being on the trading floor and having somebody come in who had gone to like Harvard and all this stuff and had been well trained, and they got into a situation where they had money and a badge, and they just couldn't pull the trigger. They said, well, I could do this trade, but it might go against me, and there's just too many reasons not to, or I could do this trade. Sometimes we just have to step up there and just do something, do anything to get in there. But I want to go now and take a look at the week in review, and also I want to discuss what has been happening in my little trading world this week and what's happened to my positions really quick. And I hope that by sort of walking through my train of thought, it can give you sort of a little bit better idea of what people kind of think about when they're trading stuff. So let's go through that exercise now. And I apologize, I'm juggling with just one screen today, so be a little patient with me as far as like the transitions here. So here we're going to try one transition and see how that works out for us here. So let's see. All right. So let's switch this over and let's see how that looks. All right, so this is I'm just gonna go through what happened to volatility this week a little bit, and you're not gonna see me here. You're just gonna see the screen. So here we go. Okay, so we had kind of a wild ride with the VIX this week. It kind of seemed like we are going to have a market downturn. We came into last week, and in the last couple of weeks, I've heard a lot of people talking about how this is the top and it's time for a correction, all this kind of stuff. And every time I hear people talking about it's time for a correction, that to me is a very bullish contrary indicator. To me, that means things are probably going to go straight up, because if everybody's worrying about it going down, then it's probably not the moment that it's going to go down. We had a positive, I believe, unemployment report on Friday, which after which the market rallied. I'm not going to guarantee that there's like a causal effect between the two, but it appeared that, but the facts are that after the unemployment report came out, we did rally. But I do want to take a look at UVXY here over the course of the week, and let's see if we can pull back to here's a 10-day. Here's a 10-day chart, and we've seen sideways to up action. We did have a high of 35.70, and as far as my own positions, what I did was I did put on a position about a week ago where we were trading around 32, shorting the VIX, and you can see it's been a bumpy ride for me. We're almost kind of back to where we started. We're down to 31.22, so a little ground has been won here. However, this isn't the total story, because when we look at this, we see kind of sideways action, but the reality is that these instruments are decaying at a rapid rate due to Contango. So if we roll over here to VIX Central, we can see that when we look at the chart, now this is the term structure for VIX futures. So what that means is these are all different futures, May, June, July, and the two which we're most concerned with are May and June. Those are the two front month futures, and those are what make up UVXY or VXX. And there's been a little controversy with name changes with the VXX, VXXB. The VXX, original VXX, the note it's an exchange traded note, so it's a little bit more complicated than a stock. And it did expire at the end of January. So then the new one started, which doesn't expire, I think, for like another 20 years or something. But they had to change the name for the new one. And then once the old one was completely off the books, they changed the name back to the old one. There's been some confusion about how late these options trade during the day. And I believe that the options still trade till 4:15. They are on the SIBO BZX network, which is a network of issues that trade longer during the day than normal stocks. And it includes things like, I believe, the SPY. There's a number of different SIBO BZX exchange. It was formerly known as the BAT exchange and changed its name to SIBO BZX in October 2017. Anyway, these issues, which includes volatility and some other ETNs, the options trade till 4:15, whereas the regular stock market stops at 4 o'clock. However, I would not trade these after 4 o'clock if I were you, because the liquidity widens way out, and they've given the market makers a license to rape and pillage between 4 and 4:15 for these. So I've never gotten a good fill trading after 4 o'clock. So I would recommend against it. For all intents and purposes, just stop trading these things at 4 o'clock. Otherwise, if you're putting limit orders in, then you control your own destiny. But if you're not positive about the valuation of these things and you're trying to just kind of trade stuff mid-market without really knowing what something's worth, I would stay away from trading between 4 and 4:15, because it's the liquidity is awful. Some of this stuff is like $3 wide. All right, so anyways, the futures are in steep contango now, 9.3%, and that means that every day a portion of these futures that were worth for 14.25 in this example are being sold, and in exchange for these ones worth 15.58, and all this stuff is falling towards spot. And so like every month the bar gets kind of raised a little higher here, and there's even more room to fall towards spot, and that's just kind of putting a lot of pressure to the downside on UVXY. And if you just watch this for a day or two, you might not notice that. You might be like, oh, well, it seems to just kind of be reacting to the VIX, but all of a sudden you're going to notice like that week before expiration, all of a sudden it's going to be like boop down a buck, boop down a buck, and we're going to have like a $3 down day, and you're going to be like, what happened to my UVXY position? So you're going to see a lot of people on StockTwits saying, well, I bought 10,000 UVXY here, I bought 5,000 here. But I would be very cautious about buying UVXY. It's not just me, but many, many publications out there have explained why it is a bad thing to hold UVXY over time. Can be a great lottery ticket in the short term, but to hold it over time, a bad idea. So if we just take the Contango that we're in right now, 933, and we multiply that by the stock price, so like 9% times the stock price, you get about $3 a month in decay. So that's a lot of down pressure on UVXY and whatnot. If we go to Contango section of this VIX Central and we isolate, let's try to isolate 2019 here, and then we just look at the first 2 months, okay? Everything above this red line here is Contango. So we know that in December and whatnot that we had these down moves and we were in backwardation, but ever since that December we've been in Contango, and it appears to be still building now, up towards 10%. You can see we've been in Contango for a while, and this is going to put pressure on us to take out the all-time lows. The all-time lows being around being exactly 30.38 for UVXY. And when we have a day where we close with it way up, when they rebalance, they end up having, because this is leveraged, it's not leveraged a lot, but it's 1.5 times leveraged. And to get the returns that this guarantees, they need to balance it 1.5 times. So when we get a big up close like this, they're going to have to buy extra futures to balance it. And then, and then the day before we get a big down close, they have to sell extra futures to balance it. And all of that, it's going to create even more decay over time. So you have these big up moves, and then it closes up there, and then you have these other big down moves, in opposite moves day by day. That's just going to exacerbate the decay situation here. So it looks like we've kind of moved sideways for the week, but this price action here combined with the decay approaching 10%, or I'm sorry, Contango approaching 10%, is going to cause this thing to really go lower over the long term. Now remember, this is only a week, so you don't really see the effects, but you start to back out 20 days, 180 days, and you start to see really the story. And this chart here is really the story of UVXY this year so far. Is just this huge down move from 94.95 on down lower. And this isn't a situation where like this is oscillating back and forth. This will continue to go lower as long as we stay in Contango, which we appear to do about 80% of the time. If we were to look at the VIX chart, it's a different story. Now the VIX chart, we are at kind of the low end here, and this will oscillate. This will go higher at some point. We don't know when, but it will go higher at some point. If we back out to the year chart here, we can see that at this time last year, we were around the same area, and we did move lower from this area at this time last year. But there's spikes along the way, and there certainly will be spikes again. This is not like the end. Things are going to repeat itself over and over with the VIX. But with UVXY, because of the decay, it will continue to move lower. So for me, my position is I bought the UVXY I bought the 32.30 put spread in June. So I bought the 30 put and I sold the 32 put. So that's a $2 spread. So the most it can be worth is $2. I paid somewhere around $1.15 for it. And with my expectation of being able to achieve the $2 maximum worth for it with UVXY below $30, 48, I believe it's 48 days from now when it expires. So that's my goal, is for UVXY to be below 30 and 48 days. We're on track right now, but with some bumps in the road. Now, if we look back on the week, it would have been awesome, if I had money on the side and I was looking to get in, how great would it have been to even on Thursday, I could have jumped in here around the $35 mark and put a position on right then. I probably could have bought the same spread for significantly less than $1, thus setting myself up to double my money. But the only way that you can get in on a trade like that is if you do have an account open with cash on the side and you're ready to go. That's why I preach a lot to people that it's great to have bullets. It's great to have cash on the side to jump in on these situations. And I indeed was able to jump in a little bit. Right on the open Friday, I bought a little bit more, but it wasn't as good as if I'd been able to execute on Thursday and jump in a little bit more. But that's the story with UVXY for me, is shorting it, giving it a couple months out, and hanging out as it moves lower. It's not a sure thing, but it's a strategy that's been working for me. Okay, I want to bring on some other people who trade UVXY in different ways and the VIX in different ways. I have in the past, of course, and I'm going to, as we move forward, to give you different ideas as to how people trade this. Remember, there's no right or wrong way of trading stuff. If you can figure out a way to make money, then do that, and I support it. There's a lot of stuff in the trading world that I don't either know how to do or don't really am not convinced it works for me, but it might work for you. The key is to get excited about this stuff, learn about it, and start becoming an expert in some little niche yourself, because, who wants to get a real job? Let's do this instead. All right, thanks for watching today, and we will see you in the next one. Things have been a little busy around here, but I will be back shortly with more for you. And here I am right there. Thanks for watching, folks. And we'll have more for you coming this week. Good luck to all you traders. Thanks, everybody, for reaching out to me. Thanks, Successful Trader from StockTwits, for sort of recommending me on this list. It was great. I have like 100 new followers on StockTwits this week just because I was recommended on this list of people to follow. So thanks so much for that. It's always exciting to have new followers, and I will try to be worthy of you and provide you with quality information that can help you make a little bit more money for yourselves. I'm helping out people with their 401ks, like what to pick, just in my general normal life. How to set up their 401ks and what to pick, and just, my main recommendation is to try to convince people to save just that little extra 1 or 2%. If you add 1 or 2% to your 401k savings or your savings in general, you're not going to notice the difference that much, but it's going to help you out in the long term. So there you have it. I'll see you next time, folks.